What's up, everybody? Welcome to another edition of The Morning After. Here I am with you, as always, the bearded boy wonder, Dave Bartosiak, and today, my friends, got some glorious stuff going on. Yes, rocking out to Metallica this morning. I told you guys I'd switch it up, right? Because last time we were getting a little Margaritaville, I think it was. So we're going to rock out a little harder today. Just waiting for you guys to trickle on in, as I always do around this time. I saw a few of you in the chat, so that's good. What's up, Dr. Paul? How you doing? We've got some goodies here. I think there's some good stuff that's developing on in the market. Hey, Trevor, how you doing? Good stuff developing in the market here, specifically with the tech names. Yeah, we're gonna definitely be talking about Amazon. First, I want to just look at the NASDAQ, right? And I went over this a little bit in the Dave's Daily Dive. I've been playing off of this in the Daily Dive videos. I have a fib that I drew from here to here. And then I drew extensions. So just because of the way that the math works, here's retracements in the positive direction. So then extensions are in the negative direction. So if you want to add a fib extension on this, you just do negative, 38.2. That's the one I'm going to use here. And if you notice, oh, hang on, let me tweak this a little bit. Get this guy where he needs to go. Right there. So move higher, stalls out, pulls back to the 61.8 initially, then dips even further. Finally rallies, breaks through this level. Now we're talking extension territory, and it stalls out just shy of the 38.2% extension of this move. And then now here we are. Basically, the highs here, this 63.41. Today's low was 63.37, so they came in, just nicked it a little bit. But we got to see what happens. So obviously, yesterday's low is a major area, but this 63.41 is also a pretty good area to keep an eye on. So far, intraday, this thing's whipping around. I hate using this free stock charts to show you guys this. I'd much rather be in the NQ futures, but I'm having some issues with the data feed there. I had a data feed hooked up from NinjaTrader. Sorry guys, I'm sitting here grumbling. I had a data feed hooked up, and then something all of a sudden it's like, oh, your login doesn't work, and I'm like, nothing frustrates me more than something you set up that all of a sudden doesn't want to work anymore, and it just makes me not want to even deal with it. Especially if I can work around it, and then it's frustrating because then I'm not using NinjaTrader intraday unless I'm trading, but I haven't been trading futures recently. Mr. Wallace, how you doing, buddy? So we got some things happening here, a little bit of sidewinding snake action on the NASDAQ, probably some sort of market profile. I bet you there's some significant level happening right here, but I'm not worried about the NASDAQ that much, just kind of giving that to you. What I am worried about is here with Amazon. So obviously a big gap down on that earnings report, right? Not too happy about that. I know we did this. Hey, Danny, how you doing? So, the day before, right? This is when we do our analysis. And then basically our Iron Condor is a 1090, 1010. And then yesterday, intraday, everybody's freaking out like, oh man, what should we do? And honestly, what you should do is if you don't have the Condor on yet, you kind of wait till the end of the day and then go ahead and put it on near the end of the day. Because you're still going to have a ton of implied volatility there. Because the event is the earnings report. So it's going to stay there until the event. But I know a lot of people get in kind of like right after I do the show, which is fine. So we're here, right? Okay. So the moral of the story is you can't freak out when this happens. Just like you can't freak out when this happens. Because remember, you're short. So time is working with you. Now here is the very strange part. 1090s and 1010s. How close? Regardless of what happens today, even if Amazon breaks down and goes to 950, right? How close was that condor just heading into it, right? So the market tells you, the options market tells you a lot about what to expect that next trading day. Even if you end up being wrong with the trade that you put on, or it doesn't work out for you, whatever it is, there is still a significant impact that options market makes. Because those people that are throwing those contracts out there, that's big money. And so that's why I guess this is a better visual example when you guys ask about, you know, Dave, why do you care about open interest inside of an options contract, things like that? Because I'm looking for where people have shown their hands, where people have said, okay, this level matters to me. And that's what you get in an options chain. It's similar to looking at level 2 quotes and being able to see where the liquidity is, where the big bids are, where the big offers are. It's the same thing. People are showing their hands. So then based on that landscape, you can go, okay, well, what are the odds that this happens, that this happens, that this happens? So smart adjustment, Danny. You can always adjust this thing. And that's, you know, even if I did this video a week ago, you wait till you get closer and then you put it on and you adjust. So now, what are we looking for out of Amazon? The bet inside of me wants to be long Amazon like right now. Like right now. In the hopes that it gets into this gap and people start to realize, hey, we never cared about EPS on Amazon. So why are we caring about it all of a sudden? I think this is headline total BS right here. I think that the selling is programmatic, total BS, and this thing trickles back. I didn't look at that report and think that something was fundamentally wrong with Amazon. This is what Amazon does. This is what they've always done. That's why when I was talking about that price consensus and EPS surprise chart, I said, well, maybe you don't worry so much about Amazon's price consensus and EPS surprise, because we've never been overly concerned with what happens from the earnings standpoint on Amazon. It's been more about revenue and revenue growth specifically, and what they're going to be doing moving forward. So Amazon right now trading above this VWAP, but you see throughout the course of the day they've been kind of bouncing around it. I think it gets into this gap a bit, so I'd be looking to get long immediately on Amazon in the hopes that it trickles on back up throughout the course of the day. The lows, I think the lows have already been put in. And this is being confirmed really by the NASDAQ. NASDAQ gapped down big, started to rally back up. So I think that's what's happening there, okay? Now our other big tech name and the other condor that we need to look at is the Googs. Similar situation, guys. Gapping down. Why? I don't know. Just because all the tech stocks were going to be down this morning. So a gap down. Trickles up. Now remember, it's Friday and it's the end of July. So these summer doldrums that you get are, yeah, long for a day trade, Dr. Paul. these summer doldrums typically have associated with them thin markets. And after, if you think about it, the pressure here and the volume was all to the negative direction. And then the light volume, I think, is going to trickle in the opposite. Maybe I'm just overly optimistic here, but that's been the pattern that we've seen. So basically, this is telling you the Bears lost. It's not even September yet. The Bears are already losing. Yeah, and then I think low volume is just going to tick up. We're going to get some thin to win throughout the course of the day today. PJ, how you doing? So that's what I'm looking for here. Just a little bit of trickling on up, and you're going to see that. So I know the Qs are a popular way to mess around with this too. Look at the Qs are doing the same thing, just above the VWAP right now. It's not a runaway screaming buy. And this could flirt, you know, we could be flirting back and forth with this. We'll see. See who wins here. And again, the NASDAQ, the composite's going to do basically the same thing as the Qs do. And then again, Amazon, just checking with this periodically. So already you could start to see this sort of slower, little smaller trickle up, right? Lows are getting a little bit higher. Highs are getting a little bit higher. I don't think it's going to be a crazy spike up or a crazy dip down. So that's what I'm looking at here with Amazon. So I don't think you have to worry about the condors too much. Definitely just keep an eye on it. And there we go. Who else is big on the radar here? Well, here next week, we'll get into this. No, where are we at? There we go. So we've got Apple and Tesla on Tuesday and Wednesday of next week. So I think I'll end up doing Apple on Monday, Tesla on Tuesday. The week after, we're going to have Alibaba and NVIDIA. And then whatever else you guys want, you think would be good, just shoot me the emails. Let me know in the chat room. Whatever you want to do. And we'll just go from there. I think we got a little un-G-rated here. Did we get on G-rated? I think Corn is being a little violent here today. I gotta reel it in. There we go. I think Corn was trying to get a little too explicit for Zach's live trader, I think. So anyway, yeah. So Apple maybe Monday, and then Tesla Tuesday, and then again whatever you guys want. Yeah. When is AAOI reporting? I do want to talk about them because it's just such a great story. They're going to report Thursday? Is that it? Yeah, Thursday. So maybe we could do them Wednesday. So that seems like a pretty decent lineup there, guys. What do you think? Apple, Tesla, AAIO? I think I've done worse than those three. So I think that's what we'll do. That should be good. And then whatever else, maybe later in the week we do another one or something. It just depends on when we do our morning after. And then I just like doing these on Friday because we get trades like this, right? Where you know you have options expiring, and then you can go ahead and pack at something like this. Why don't we look at AAOI here? Of course, I'm already in here with fibs. This was a big extension that I drew way back in the day. Obviously, I've been following AAOI for a little bit. Look at this move, though. This is insane. Basically a 10-bagger. I look at what's happened recently. I gotta get rid of some of these. There we go. I guess that's a little better. Got all of these fibs all over the place, just looking confusing. There we go. That's much better. So we haven't had. So this is good. Something that you can use here. But you get worried sometimes when you see these moves higher, like this. One thing that can calm you a little bit is using this money flow. You're looking for confirmation of the move pretty much in the money flow. So you want the pattern of the money flow to be in the same general direction, right? So to the upside, and you got that there, so that's good. So what that's telling you is that this is, you know, there's been volume coming in confirming this move higher, which is great. What you don't want to see is money flows going down when the stock's going up, because that means the volume is actually peeling out and it's been lower and lower volume, so the big up days haven't been met with that conviction. So this is good that they're moving in the same direction. On the flip side, you could use this where if this is going down and the stock is on its way up or going sideways. So here you had a situation where AAOI was starting to creep up while these money flows were dipping. So that creates a bullish divergence there. Or I'm sorry, it's bearish divergence here, right? Hang on. Let me get my colors right. Okay. I'm gonna line this up properly, because I'm gonna make a point here, darn it. Okay. So you got AAOI coming down. So this is between the 10th and the 24th, right? So then between the 10th and the 24th here, so the stock really wasn't going down, but these money flows were dipping, right? So this was actually an area of concern when you were trading AAOI. You should have been worried here, because there was more selling taking place than there was buying, okay? Now what happened is this started to turn around, stock started creeping up, and then these guys, which are likely not just people selling but also shorts getting in, then we're in trouble and had to flip and start buying, and then that's what starts to cause these surges like that. So it's a neat little story that these money flows can tell you, because what they're doing essentially is keeping like a running tally of the positive volume versus the negative volume and where things are closing. So it's something you can play around with, and then anytime it's below zero, they've been overall kind of getting rid of it, and then once it's above zero, they've been accumulating it. So you could play these crossovers of the zero line too. Obviously it's more significant after it's been negative for a while and then crosses over, but just another arrow for your quiver that you guys can use. I'm more of a moving average guy, especially when something's interacting with the moving average as well as this is with its 50-day. So here's a few areas where it's kind of interacted up and down with it, right? It's never a hard limit, more of like an interaction zone, and it's been really bullishly confirmed up here. So this is good. This is good stuff. My audio? Am I getting quiet here? Am I just I'm just talking to myself. Let me see. I think I got it, right? I think that's all I can do really here. Maybe I accidentally pressed a button or unpressed a button, or my mic's not quite as, you know, because I am soft today. Hang on. Maybe this would be a little bit better. Had the mic sagging a little further than I usually do today. Okay, cool. All right, so I think I needed the caffeine is what it was, Trevor. I got to drink this coffee. I didn't have breakfast this morning yet. I ate like a pineapple spear and drank some coffee. And then I have these collard greens that I make. So it's a strange combination. I just couldn't put it together. What did they do to Twitter yesterday? Destruction. They beat Twitter up pretty good here. Fell off a cliff. That's no good. Back to the lows. Back to the July lows. And here's another situation, right? It interacts with this 50-day moving average. Kind of trades along it throughout the course of the day. Tries to rally again, and then this just flat runs out of gas. I think the natural progression of this was Twitter was going to eventually find its way over to the 50-day. Now here's the other thing that you got to watch for when you're using these moving averages is the slope of the moving average. So here it is. So what I mean by that is, you know, if it's sideways, it's got no slope. If it's going to the upside, it's got a positive slope. If it's going to the downside, it's got a negative slope. So here, when you look for changes in the slope of these 50 days. So here, this thing went from having a positive slope, and now it's starting to roll over to a negative slope. That's never good. And then when you have fundamental negatives, like no users, it just compounds it. So Twitter right now, it's just exasperating. I think it had some hope, but Twitter was so bad for so long throughout the course of last year, and I think we made some money being negative on Twitter. Double bottom here around 14, and you gotta believe that that's where Twitter's heading. That it's got to retest these lows, right? Granted, this is the first step, but that's a pretty disappointing bit of data there. So I think you could play this a little bit. Here is the first leg, so the 1627, which is almost where we got yesterday. You get another big down day. It breaks through there, and then it's off to the races, getting all the way down, probably to the 14s. So there's that. I'm going to continually check back in with Amazon throughout the course of the day. So 10-11 right now. Again, I think we're going to trickle. I think we're going to trickle on up throughout the course of the day. NASDAQ looks a little heavy though. We'll see. The good news is, so anybody that does have a Condor on, you can completely ignore the top side. You don't have to do anything. But if it starts to get close towards the end of the day and you're near here, you're within this level here, just go ahead and close out. You're going to have to close out the short side of the puts. Now, real time, what's the put side of this Condor even trading at right now? Because it might actually make sense just to close it as we get a little bit later on in the day. Because, or I mean, I'm saying it might make more sense to just close it now versus taking the risk on the end of the day if it's very, very close. Because I bet it's going to be relatively close. Like, I can't imagine that there's going to be a lot of money in that spread right now. Or you just go with the thin to win. I don't think you should be as nervous. I think when we put these on, we've got pretty good risk parameters to begin with. So it's not going to make or break your life, right? And I think with this one, It was I need to pull this up actually. It's 77 cents right now. I think I'm getting Amazon confused with the other Condor. The Google Condor was an 80-cent net credit overall, right? I gotta look. What was the net credit on the? Oh, what was the net credit on the Amazon? I think we're fine anyway. I didn't put it in the GBU yesterday because we didn't have any reaction from it yet. By the way, guys, now that I got you guys, just wanted some. What do we? So I know there's a few people that like the GBU because they don't watch this live stuff. So our guy in Portugal, oh, it was 208. Oh, okay. Our guy in Portugal, who Bruno, comes in sometimes to the chat here. I know he watches the GBU a lot later because he's over in Europe, so it's a little bit different. But with the GBU stuff, I don't know. Like I got no problem doing it. I'm just trying to find a cooler way to do it. Because what happens is when I do it, I do them like 1 o'clock on Thursday because that's when the studio can help me with them. Obviously, I don't really need them to help me with anything, but I let them help me on Thursday. And then it's like I have to send them, that PowerPoint ahead of time so they can set things up. And then the market moves in between the time. So I hope you guys aren't that worried about the actual numbers in there, I guess is what I'm trying to say. I'm not trying to make that like a definitive this number, this number, this number. What it is meant to do is give sort of my philosophy and my thinking behind those positions. So I guess that's what it's worth, and that's why I do it, and that's why I'm going to continue to do them. But for actual numbers and stuff, I think, we have to be live for those kind of things. So that's why I like doing this morning after, especially recently, because we can really get hands-on onto these things. I'll let you, Jeff. I hear you, buddy. I hear you, buddy. I mean, I'm pressed skip, but now Pandora's not letting. Pandora's being weird right now. Figures. Come on, Pandora. It's always something. Do you ever have? Does Pandora crash a lot for you guys? I swear it's constantly crashing. Not as bad as this bad boy, but it does have a tendency to crash on me. All right, there we go. So we got the Amazons of the world. Jeff, you were talking about Starbucks? I know we didn't cover it, but why don't we look at it? Holy smokes. Woof. There's this thing that happens. There's this thing that happens, man, when your guru leaves, and then it's just not the same. I've cultivated these awesome Pandora stations over years, and I just love them. I just put them on and I just go, and that's it. I just like them. Anyway, so when your guru leaves, it's tough. Remember when Tim Cook took over on Apple, we weren't really quite sure that things were going to happen. And then now we've seen that he's been able to make consistent profits and everything is cool. But with Starbucks here, in the wake of Howard Schultz leaving, there's that intangible of having these guys, right? These like demagogues where you have, and that's who you're cheering for. So the Restoration Hardware folks are cheering for Gary Friedman. The Tesla guys are rooting for Elon Musk. The Amazon people put their faith in Bezos. when those guys leave, and then you have a little bit of roughness, the stocks can suffer. And here I'm looking out. This is 2015, mid 2015 to now on Starbucks. Now, granted, they were just at all-time highs, and now we're in the 50s. The bottom end of this range is 51, but just the dead money of Starbucks over the course of 2 years. That's got to be maddening. So here's the NASDAQ over that period of time. I mean, here's the Dow over that period of time. Look at Boeing over that period of time. And your Starbucks money is just dead money, just chopping sideways. So, I don't know. Did anybody ever go to Teavana? I think I went there once. They used to have one on Southport in Chicago. I went there a couple times. And it was only because there were people outside like, oh, you got to come in here and try this. And they were good looking. So I was like, all right, fine. Let me go inside and see what's going on. And I went inside and spent $4 on an iced tea. And I was like, whatever. But yeah, look at this huge move in Boeing here, guys. This is crazy too. Because these guys really didn't have that huge of implied volatility on this move. Oh, this is what I wanted to do. I forgot about this. Our surprise activity. Now this is very nice. This is my G14 classified thing that we have here at Zacks. How do I do this? Can I sort by time? Yes, of course I can. And here you go. Oh, a little bit of Skinnerd on this channel. No, we can't have Skinnerd on this channel, really. No. Like I said, Jeff, it's about cultivating these. So I love this because I could see coming in who's got big beats. So what I'll do is I'll look year over year EPS. And here we can see who had a terrible day. And then who had a great day. And then you can dive a little further. Of course, the percentages don't mean too much. But if you look at the actual number, and then I just kind of go through. And then this is, sometimes I'll use this to, especially on a Friday, then I go in and say, okay, well, what is this about? And then I can find some ideas this way. This is what we're doing here, is looking for ideas. The Barnes Group, 81 versus 69. Huh. And they don't care. They're taking it down. Look at this. Look at this. Wow. Another stock out of nowhere that goes from 31 to 60. It's pretty astounding. F5 Networks. Oof. So let's do this. We can go ahead and pull up our quick little analysis on this. Let's look at F5. So we see what's happened with revenue. Nothing that spectacular. And see what's happened with EPS. A little bit of growth. And again, I do it the same way. I mean, the same thing that we do with Zach's Live Trader in terms of going through the motions. That's what I do with every stock I look at, like really. And this chart, I can't say enough about it. This price consensus EPS surprise chart just tells me so much. So here I'd have to investigate, because this sure looks like a lot of negativity blown out of proportion. Sure, you've got these estimates coming down a little bit, but there was still growth. So why the huge dip? So that might be a little oversold there. But again, you do have 3 misses in a row. That's a bad look. It's a bad look. So I guess it depends on how patient you are. This is good though. I want to look at the reaction here. And look at this. Does this look familiar, folks? A gap down, finds its low, and then what does it do? Trickles higher. Now it's in that gap and trickling higher. Gaps get filled. So I think this is a good short-term play to continue to fade this and fill that gap. Plus, if you look at what's happening right now, a little bit of interaction with the VWAP, so hopefully it can continue on higher. So that's good stuff there out of F5. That might be a short-term opportunity there. I like it. Oh, a little bit of Raytheon here for the... You know, I think that there are higher beta opportunities if you're looking for sort of short-term kind of options plays here, or short-term trades. And this is more of the long game, I suppose, here with the defense stocks and the large caps and such. Baidu, man, wonderful. Did you see Alibaba? This thing just keeps on trucking. Baidu keeps on trucking. I've got, this is a name I have in Home Run, Tall Education Group. I'm just throwing out all things Chinese on you right now. Momo. This is a Chinese mobile social gaming stock to take a look at. So, yeah, all things China right now are in fuego, which is great. With Take-Two, when is, you know, GTA 6 coming out? We got another couple years for that. What's on the horizon? What do they have come out soon? I want something awesome I get to play. OLED. You know, I am still apprehensive about basically this whole space. Not because I don't believe in the long-term prospects, but because I've been kind of chopped up in some of this where I've been the guy who's caught this. Like, I didn't catch this move, but I caught this, and then I get sideways. That's what it is. Red Dead Redemption, the new Red Dead. That's right. That's right, Jeff. I knew there was something coming. And I've caught this. You know, so my timing on these has been terrible. And this has been a hard stock to time, unless, of course, you got in early on. So I think the way to play this now is range bound, right? So you've got to wait for the stock to come back down to the 110s and then catch some. As you can see here, previous spikes on the commodity channel index. There's one here, and then now there's one here. So I think I would, and even though this 50-day is kind of lingering about, I'd be patient with it, and I would hope for a retrace to the 110s before jumping on. If you are going to jump on here, you're going to have that. This is okay. So this is a good one. I'm glad you guys brought this up. So here's a point, right? The difference between patience and jumping on now. So you jump on now, you could say, okay, 50 days giving me support here, and if I get stopped out below 110, then whatever, I'm out here. If I get stopped out below here, I can be out, right? So you've got all of this risk versus waiting for it to come back down here. Then you can buy it here, and then you can still have a similar stop loss that's pretty close. So your risk is a lot smaller. Now the thing is, the odds of entering the trade are a lot smaller too, because you're not quite sure that this thing is going to trickle on down here. So this is really where the patience comes in. So would you rather be patiently waiting for a stock to come down to your level, or would you rather be patient when you're losing? I'd rather be patient and wait for the stock to come down to my level. So unless you're going to be disciplined and say, okay, I'm going to buy it, and then I'm just short on the other side of this 50-day, or I'm out on the other side of this 50-day. But the problem is you've already seen that this stock has come down here. So it messes with your head a little bit. So I would wait, essentially, is what the moral of the story is for me with OLED, specifically, just on the charts. Just on the charts. No, we're never going to look at options on futures, because Zacks doesn't have any futures coverage. So no. I personally like looking at that stuff, but officially no. You can emulate that pretty good using options on different ETFs and such for the most part. So the actual risk parameters are going to be a little bit different. The amount of money that you have to have invested is going to be different, but you can accomplish the same result, right? Your same bullish or bearish approach, you can duplicate it using that, okay? All right. Oh, Azar, this is, how did you know? I love talking about all things Ferrari. Where do I begin? Where do I begin? Okay, so Ferrari has been just insane, taking off like crazy. And the reason is, this is a company that used to sell, you know, a few thousand, 2, 3. Then they started selling 8,000 cars. Their margins are fantastic. Their profits per car is just amazing. And you've got the wealth effect that's happening all around the world. So you got a lot of rich people in China that are loading the boat right now on these things. They've also expanded their lineup. So back in the day, you're talking, okay, so in the 90s, right? You had a 348, and then a Stradale, a challenge car that would come out. You also had like the V12 car. So that's all you had. You had the V8 sports car, and then you had the V12, and then you had special editions of each, basically. Now, Ferrari's lineup, not only do you have the V8 sports car in the 488, and then of course you're going to eventually have the 488 challenge car. The F12 super fast, which I think now is the 812 or the 812 super fast or whatever, which is the V12 car. Then you also have the California, right? So you got the GT convertible car, which they never had before, and then the wagons that are out. So they had the FF. Now they've got this new the GTC Lusso. So they're expanding their product offering. A lot more people are buying these cars. They're producing more of them, and it's changing the game, and it's changing their body. And that's why they're making money. The other thing is, now all of a sudden they're starting to win again in F1, so that certainly doesn't hurt them at all. So this Ferrari story has been crazy just looking at the chart, but now I want to Zaxify this thing. So we can see what's been happening to them. So we've got them as a number 2 buy, so earnings estimates have been ticking up. Look at this. As long as those estimates keep going up and Ferrari keeps beating 1, 2, 3, 4, 5, and these are big beats too. On Zax we have a little thing, so like each dash is like 10% on the beat. So they're beating, they're going to continue to beat, and things are looking great over there. Exciting stuff. $100. I mean, I don't even know where the valuations are on this stuff. Let's see. What do they report? Oh, they're reporting next week. %8 revenue growth. Look at this though. A little dip in the revenues next quarter. But look at current year and next year. Really good revenue growth there. And then you got analysts pushing up their estimates. So now we've gone from 250 to 269, 286 to 308. And then here are the beats, right? 30%, 39%, 22, 32. So those are the big beats here. Beautiful stuff out of Ferrari. Oh, man. I should have brought you guys pictures. Last week I was talking about it. With Dr. Paul, I told you about it too. We were going... I went to, I just went nuts. There's a place called North Miami Lamborghini, or just Lamborghini Miami, I think. I don't remember. It just went car drooling, basically. So I was over there looking at they have a Ferrari, a LaFerrari, for, I think this is the price tag. Yeah. It was a $3.7 million car that they had there on the LaFerrari. It was absolutely beautiful. And then they also had a McLaren P1 for $2.5 million. So this was a pretty good dealership to be at. And then after that, I went to this place called Swap Shop in Fort Lauderdale that had another LaFerrari and some race cars with some heritage that were worth several $1 million also. They said perhaps the most expensive Ferrari on earth. They said it's probably a $10 million Ferrari. It's like a 275 GT B or something. So exciting stuff. Let's check back in with Amazon real quick. It's going to make us nervous all day, I think. So just keep an eye on it, folks, if you are in this Condor. As it gets closer to the end of the day, it's going to be good. You know, they have a Bugatti, and the Veyron's not 20 million. They have a Veyron. They had a Veyron there. Not today though. Last time I went, they had a Veyron and they had a Pagani Huayra. What about Google? Where are we at with this? Might be out of the woods with the Google Condor. 947.50. That was kind of the lows of the day. I think, again, guys, as this volume starts to dry up towards the end of the day, we're going to just see this sort of tick on higher. So Amazon's still not out of the woods yet, but above the VWAP for now. What's the NASDAQ doing? Already starting to see a little bit of a trickling up. A little bit. Those futures guys will whip this thing around a little bit though, so we'll see. I think we get some thin to win today. S&P's under more pressure than the NASDAQ. Well, that's not good. And the Dow's up. Almost. Interesting mix, don't you guys think? I like, it's never a dull moment. This is earnings season. you get these bifurcated markets where just tech decides to go one way, the Dow goes one way, the S&P goes another. Interesting stuff. Where are we at on the VIX? I just use UVXY a little bit. Look at it rallying a little bit. Look at this spike yesterday in UVXY. My buddy caught some of this. 28.85 up to 33 in UVXY in an hour. Overall, the VIX, I think I get 11. 11 on the VIX. Well, that's not so bad, right? It's healthy. We need to get a little bit. We need some volatility. We really do. So overall, this is going to be an inside day for the for the S&P. It looks like large cap's doing okay. Russell under a little bit of pressure. Nothing catastrophic though, folks. You know? But yeah, PJ, you get that a lot during earnings season. Especially when you're talking the Dow. You got 30 stocks there. So when you get a big report out of somebody, it's gonna have a mind of its own. So that's why. The and the NASDAQ thing has been, I gotta stop shy of this looking at the higher beta and saying like, oh, there's the first chip to fall, now the rest of them are gonna come down. Because for a while there we had the NASDAQ just steadily accumulating to the upside while overall stocks are just kind of sideways. So that's a good question. So this is the thing, when we have a short position like a Condor, and we have a short, so we got a net credit on the bottom end of this. If the thing goes to 105 in like right now, right? Let's say this jumps down to 105. What are you really fixing? What are you saving? What risk are you taking off the table by just cutting bait right there? You know, that's almost like you're ripping the thing totally. Good question, Paul. So alpha is excess return, and beta is volatility in relation to the S&P 500. So portfolio managers try to get out there and deliver alpha. They try and give you returns above and beyond their benchmark. And then beta is usually given, it's a number. So if you have a beta of 1, then you are just as volatile as the S&P 500. If you have a beta greater than 1, you're more volatile than the S&P 500 historically. Lower than 1, lower. RH. Be careful with RH. Because of Gary. Remember, we were talking about the gurus, the jockeys. You don't bet the horse, you bet the jockey. So let's look at the price consensus and EPS surprise here on RH. This is one of those stocks that has a cult following. Their demise was warranted, okay? No question. This EPS, first we had growth, and then the bottom falls out. A very rough 2016. But now it appears that there's a trough. And that's what all this is. This is all hype in the hopes that this continues. That this trajectory goes on. And they are coming off of a string of 4 beats in a row. So things have been going they've been going well here. They've turned around and they're going better. Now, what you got to ask yourself is it $50 better, right? Especially with a stock coming at 25, almost tripled here. Is that worth it? Have they warranted that in their EPS? Now, here's another thing, though, okay? 2016 numbers were what? $1.25 when the stock was at 25, so 20 times. And then where are we at now? So here's when you can start to look at the valuation a little bit and decide if this thing's just overcooked, overdone. So you can see here, revenue numbers still huge, revenue growth, current quarter, next quarter, current year numbers. Next year's the struggle, though, which is interesting. EPS numbers look good, though, and analysts have been a little bit mixed, but recently they've been more bullish. But look at this. So this current quarter number doesn't look so hot. Next quarter doesn't look so hot either. So I think you might be onto something by not being as bullish as these guys are. So if you're looking to play something like that, as it gets closer to earnings, I think you gotta wait till you get closer to earnings. But yeah, I don't know, James, if I would jump ahead of it and go short, or if I would wait till closer to earnings season and maybe sell it out of the money call spread. So take some of the optimism, maybe say this optimism is not warranted, and profit from that optimism versus just adding that risk of just being short, okay? So that was good. I haven't talked about RH in a while, so that's decent. So Jeff, I'm of the KISS method, my friend, which is just keep it simple. So I could overcomplicate anything I wanted to by putting together these complex spreads that are perfect based on the Greeks that I'm looking at. I just don't, when we're looking at these earnings reports, it just doesn't even factor into my decision at all, really. I don't even look at them. I look more at prices. If you've noticed, this is more about where prices are and where implied volatility is compared to where I think it should be. That's kind of how I do things around here, okay? All right, so one more thing before I get up out of here. I'll look at Visa. Just a short-term profit-taking kind of thing. Sympathy. I don't know. This market may be turning around here, and not in a good way. But Visa, if you're not already in Visa, you just wait for the 50-day. I think it's just kind of shy. It's never had that 100 print before. Now all of a sudden it's trading 100. Some people just taking a little bit off the table. I don't think it's anything dramatic. So don't worry too much about it. This is a little bit of a worry here, though. Look at this. Why did that get big all of a sudden? I gotta lock this. So here's a little bit of a worry for me on Visa. A little bit of divergence here between the stock and these money flows. So I think maybe people are just peeling off some risk here with Visa. Stocks run a lot. I don't think it's any negative on the company or anything like that. All right. All right, guys, that's all I got for you here today. I hope you guys have game plans if you have any trades that are on. Yeah, so I think I covered this before. I talked about this, but I'll hammer it home. You got to keep an eye on Amazon. It's going to flirt with this. If it starts to dip down dramatically and it looks like things are selling off, the whole market is selling off, then go ahead and cover. If not, the longer it stays right here near this level, the cooler or the closer you are to being in the green. Okay. And yeah, AMD, what that? This is a head scratcher for me. So I think that they still maintain an overall kind of bullish pattern here. I'm very concerned about the selling pressure here early on. But we are out another, right? It's an October 18th, I think, spread we have, or August rather 18th. So just try not to stress too much about AMD today. And reassess next week when things start to normalize. But this is still a nice, albeit volatile, move higher. It's still moving higher. So there's that. All right, folks. Thanks so much for hanging out with me here today on Zach's Live Trader the morning after. I hope you all have a fantastic weekend. Next week, Apple, Tesla, AAOI. It's going to be fantastic. So I will see you all next week. Have a good one, guys. Later.